Nobody talks about this, but you can actually qualify for a mortgage that you can't afford. Yeah, you heard that right. Your loan officer can actually get you qualified for a loan that you could actually be drowning in debt to cover. Here's a rant. I just talked to a client last night that did not use me and my team for financing because she wanted to buy a new home. I'm not a fan of new builds for various reasons, but this client really got hosed. The thing that really frustrates me about this whole story is that I spent numerous calls on Zoom with her and her agent trying to get her to understand that the house that the agent was pushing her to try to get qualified for was over her budget. She ended up closing on this home last year, and now we talked to her last night because she wants to refinance already. Her property taxes have increased on her homeowner's insurance increased on her, and now when she looked at her escrow statement for her mortgage payment, she's in the hole by $1,400. And what that basically means is that she either needs to come up with $1,400 or her servicer, the company who she's making her mortgage payments to, is going to spread that $1,400 out over the next year and increase her payment even further. This is why I always say in my videos, the interest rate means absolutely nothing. She's got into a lower rate of which she was so desiring to get, and she still can't afford her payment. She's drowning in debt. She wants to refinance desperately, but her loan to value is way out of whack and she can't do that. So she really has no options right now. So as a home buyer, before you start going out and looking at homes, make sure you understand what your budget is. When a lender pre-approves you for a mortgage, we are looking at your gross income. This is before any deductions come out. So if your mortgage lender is pushing the envelope because you want to go buy a new house, just know that that number is going to be substantially higher once you start taking into account your taxes or anything else that comes out of your paycheck before you start paying your bills. I kind of feel bad for this lady, but at the same time, I spent numerous hours trying to educate her and tell her that she needs to stay within her budget. But she listened to her realtor. She bought a home that was more expensive than what we were advising her on, and now she's in a position where she could potentially lose her house because she can't refinance because her loan to value is not in place, and she's got way too much debt to even do anything right now. And the only way we can make a refinance work for her in the future, we would need interest rates to be as low as probably 2% in order for her to qualify for something down the road. This is how you can buy your first home and get totally hosed. So if you don't want to end up house poor, make sure to follow me for more home buying tips so that way you can be successful in real estate.